Today, I want to talk about how something big is about to happen. We now have verifiable proof that short sellers have been losing billions on AMC. Another major bank is in the process of failing, and short and distort websites like Benzinga are being shut down. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Andrew tweeted saying, is there something wrong at Benzinga because their account has just been shut down? Where did you go? Clearly Benzinga has either broken some kind of rule at Twitter and has been closed down by Twitter, or they've broken some kind of external rule and have been shut down by the Justice Department. He said, Charles Payne, you've got to find out what happened. He said maybe someone at the Justice Department saw something today about Bed Bath & Beyond that they didn't like and had to shut down Benzinga to stop them from spreading any more FUD and to stop them from giving illegal financial advice. And as this post on Reddit says, word on the street is that things are about to get very interesting. Obviously that's some trust me bro information, likely from Lou versus Wall Street, but it's very interesting timing that Benzinga is being closed down right now. Benzinga posted this article yesterday saying Bed Bath & Beyond stock alert, sell your Bed Bath & Beyond shares immediately. As Rich tweeted, he said some short seller is clearly desperate. Hey SEC, is this even legal? Because it reads like direct illegal financial advice. Obviously what I'm doing here on YouTube isn't telling you to buy or sell shares of AMC, Ape, Bed Bath & Beyond or other stocks. I'm simply talking about the news and how that might or might not impact these companies. Obviously, I know that I'm not allowed to give direct financial advice telling you to buy or sell shares because that's illegal. But obviously these mainstream media outlets have been trying to convince you to sell your Bed Bath & Beyond and your AMC and your Ape and your GameStop shares for nearly 2 years now. Now we know this is illegal, but maybe that's not the reason why Benzinga has been shut down. As Andrew tweeted, clearly someone at the Justice Department has seen something they didn't like from Benzinga and that it's happening time and time again, and they've realised that Benzinga needs to be closed down. Clearly some short seller has been desperate for those shareholders to sell their Bed Bath & Beyond shares so the stock can be pushed back down. And it seems that way because AMC and these other meme stocks have been costing these short sellers billions of dollars, especially over the last quarter. Now you'll remember in my video from yesterday, I spoke about how much these short sellers have lost so far this year just on AMC. These short sellers in the first quarter of this year had lost over $2 billion so far in just 3 months, almost equal to the entire AMC flow. But actually I think the amount these short sellers have lost is actually much larger. Because if we read further into that article, we can see which interest rate they've used to calculate how much these short sellers have lost on AMC. That article estimated that short sellers have been paying on average only 168% to borrow AMC shares. If these short sellers had been borrowing at 168%, it's cost them over $2 billion in the first quarter of this year just in borrow fees to short AMC. But actually we know that for many days this first quarter, especially in March and now in April, the interest rate has been significantly higher than 168%, much closer to 1,000% if not above. And therefore maybe the fee they paid in quarter one was actually larger than $2 billion, or especially in the second quarter now in April and in May and in June, the amount is going to be significantly larger than $2 billion because the interest rate is much higher. Maybe in the first quarter they did spend $2 billion, but in the first quarter in April alone, maybe they've already spent $2 billion or 3 or 4 or 5 billion just to continue shorting AMC. But on top of that, AMC isn't the only stock costing short sellers an arm and a leg, because here's the top 10 stocks with the highest borrow fees. Obviously AMC has the crazy 168% fee that we know for many days has been closer to 1,000%, but EVGO has also had a borrow fee of 77.5%, Beyond Meat 70%, Upstart 52%, Nikola 52%, and so on. So these short sellers have not only been spending billions of dollars to short AMC, but they've also been spending multiple billions of dollars on top of that to short other stocks as well. Guys, be sure to sign up to Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to a whopping 15 free stocks, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use. It's incredibly clear and concise. They've also got tons of technical indicators and advanced charting tools. And with Moomy, you've also got free 24/7 customer support, and you can also trade around the clock with the full extended trading hours. And that has resulted in Citibank not being okay, because Citi is now trying to shore up their balance sheet by offering incentives to short-term depositors. They're currently offering up to $2,000 in cashback bonuses if you make a deposit within 20 days of opening an account and you keep your money there for at least 60 days. Clearly, Citibank is desperate to get money on their balance sheet, at least to last them for the next 2 months, so they can hopefully try and avoid imminent bankruptcy. As G-Man has tweeted, he said it's the sweet smell of desperation. From the Citibank website, you can now earn a cash bonus of $200, $500, $1,000, $1,500 or $2,000 when you complete the required activities. Those activities are to deposit at least $10,000 up to $300,000 or more and leave it there for at least 60 days to get that cash bonus. It seems that Citibank is clearly desperate to get cash back into their accounts and back onto their balance sheets so they can hopefully try and survive just a few months longer. They're obviously expecting some kind of giant loss or giant outflow from their accounts that's going to happen in the next 2 months that could potentially cause significant damage to Citibank, where they may go bankrupt if they don't get more cash into their accounts. aka Citibank is clearly expecting some kind of big black swan event. On top of that, Kevin Malone tweeted saying that his bond desk is showing him a yield to call rate of 34,880% for AMC. Basically what that means, with the help of ChatGPT, if you hold those bonds to the call date, they will receive a yield of 34,880% on the money they pay for those bonds. As ChatGPT says in layman's terms, a high yield to call rate percentage in a certain stock means that the issuer of that stock has the option to redeem or call the stock at a certain price before it reaches its maturity date. The yield to call rate is the return on an investment that an investor can expect if the stock is called at the earliest opportunity. A high yield to call rate means that the stock is likely to be called soon, which could potentially cut short the investor's expected returns. In other words, the market is expecting Adam Aaron to call all of those bonds, aka pay off all of those bonds very, very soon. It's basically expecting these bonds will not reach their maturity date and therefore will not receive the full yield to call percentage ratio, because they're not going to make it to the very end date, because these bonds are likely to be called and repaid very, very soon, likely in the next 2 months maybe. So it seems that AMC are expecting tons of cash to flow in to be able to buy out these bonds. At the same time, Citibank is expecting some kind of massive outflow or massive black swan event in the next 60 days. How coincidental that Adam Aaron is expecting to receive tons of money while Citibank is expecting to lose tons of money at the exact same time. Maybe it's some kind of black swan event, like a squeeze for example. And that may be the exact same reason why Benzinga has recently been shut down for desperately trying to convince people to sell their shares illegally. On top of that, Market Rebellion has also tweeted saying that Tiger Global Management, a $12.7 billion venture fund, has just recorded a 20% loss for Q1 of 2023. You may remember, Tiger Global is the exact same fund that lost over 60% last year in 2022, and they've just recorded an additional 20% loss on top of that. So again, it seems that Tiger Global Management is currently in big, big trouble, potentially similar to the trouble that Citibank is likely to be in as well. And you may remember that Bill Hwang, who had those total return swaps, actually used to work at Tiger Global Management and is the head of Tiger's protege. Therefore, maybe Tiger Global Management had the exact same positions that Bill Hwang had, those total return swaps against AMC and against GameStop, and maybe Bill Hwang's positions that passed on to Credit Suisse have now been passed on to Citigroup. And maybe Citigroup is expecting some kind of squeeze that would be disastrous to Citigroup in the next 60 days. At the exact same time, Adam Aaron is expecting AMC to receive tons of money to pay down those bonds. On top of that, we're also seeing Bloomberg models saying there's a 100% chance of a recession by the end of this year. Yeah, you read that right. Not 90%, not 95%, but a 100% chance of a recession. So we can see here this chart, the white lines are their January expectations and the orange lines are their February expectations. So back in January, Bloomberg saw very little chance of recession in March, April and May, but quite a high chance of recession in June, July, August, September, and practically 100% guaranteed a recession by November and by December. And again, for their February expectations, effectively that chance of a recession is likely to happen sooner, at least by July at potentially the latest. So clearly Bloomberg is also expecting something big to kick off in the next 2 or 3 months that is practically 100% guaranteeing the US will be in a recession. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.